Well, good morning, everybody, and happy Memorial Day. I kind of changed up my intro a little bit there, made it a little newsy for our real estate updates. Trying to cut down on that time between going live and actually coming on. I usually like to give viewers a chance to log on, but then when it goes into replay mode, it's driving people nuts because they have to wait a minute or two. A lot of people are not taking advantage of that little fast forward dot to actually play. So I'm doing my best to accommodate those viewers that watch after the live stream. And we are off to the races on this great Memorial Day, day that we set aside to honor our veterans. I hope you take on the day and have a good time, but don't forget what this day is all about. Interesting, I'm going to share with you some numbers on new construction. And before I do that, I want you to smash the like button. So that's all this costs. And then I've got some questions I'm going to get to here in a bit. So I start every morning off just kind of cruising the news and looking and seeing what's going on. And I have a hot sheet that shows me what activity's gone on the last 24 hours. And I came across this. Isn't that a weird place to put a TV? I just, I thought that's kind of odd, and you put your TV above the closet. I don't know, it just struck me as kind of funny. So, but today, let's talk about some numbers that we have here today. 5,100 listings. We have 4,012 homes that came on the market over the past 7 days, with 3,899 go under contract. That's a difference of 113. You kind of have to take these numbers with a grain of salt because it is a holiday weekend and all the norms kind of disappear. I made a little change to my 7-day moving average chart to make it a little easier to see. So the yellow lines now are more predominant. You can see it better. And the blue is a blue wave. So I'm hoping for a blue wave of listings. So you can see it's just barely peaking above that. But so I just wanted to make that a little easier for people to see. So what's going on in new construction? 40% more permits issued than in 2020. So that puts us back to the same levels as we were in 99, 03, 04, 05, and 06. Normal level. That's a normal level of new building after 13 years of no growth. A lot of catching up to do. But the market's changing. Some of the builders are moving towards a bidding process, just like you have out in the resale market. You're not standing there going, hey, they're not doing a bid, but you're going to submit your offer. So some of the builders are going away from just having a base price to you tell them what you're going to pay for it, and then they'll shop it out to other people. That could get interesting to watch. They did that a few years ago, about 13 years ago, but they didn't do it for very long. They're also reducing the commissions that they pay real estate agents that come in to help you purchase a new home because they really are not trying to drive more traffic to their development. They have enough already. But here's the real interesting thing, folks. County records show new homes purchased from builders immediately sold for much higher sums of money. Some people are profiting in the six figures. So what does this mean? Well, right now, houses are going up about 2.5% to 3.5% per month. So I did a little calculation here, and let's say you went out and bought new construction of $500,000, just flat. In 8 months, because that's how long it's taken to build these things, do the math. If you continue on this rate, 8 months times 3.5%, that's $140,000. So you can go out and get a new home under contract, and by the time it's ready to move in, you turn around and sell it the next day. I don't recommend that. It's a pain in the butt to do that kind of stuff. But that's going on out there, folks. So it's getting kind of crazy. So where is it going to go? Well, first of all, there's a little thing here called a heat map. And this heat map says housing heat index, which state real estate markets are doing the best and the worst during the real estate boom. So what they look at is they're looking at which homes have the best prices compared to unemployment and other factors such as that. And what's number one? Utah. Utah's number one in that housing. The 5 states with the hottest economies: Utah, South Dakota, Montana, New Hampshire, and Idaho. Can't help but notice that they're all cold states. Home buyers are seeking affordability and space, so they're bailing states like this, states like Alaska, and they're heading up to Montana. Now, I don't know why North Dakota's taken such a beating and South Dakota isn't. South Dakota's number 2, and North Dakota's number 35. But I put that link in the comment section below. You could take a peek at that. Now, on interest rate news, and this is really interesting if you follow this at all, and I put this link in below. I think this is the link I put in below. I apologize, I didn't put the housing heat index in. Inflation is bad for interest rates, and it's at the highest level in decades, but the housing market has a far bigger problem. What they mean by that headline is the housing market has an inventory issue. So here's new home sales, boink, 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 spiked way up, kind of going down because there just aren't enough of them. So that's the supply problem. So pending home sales, look at this. Look at this. Your eyes do not deceive you. We are indeed back to pre-COVID levels for pending sales. While some of the pullback could be driven by a decrease in demand, record low inventories are almost exclusively responsible. So we are seeing pending home sales dip. The simple fact that you're not able to find what you want. Down here is the home price index, straight up. That's not a surprise to anybody. It's about 14%. Here is the core inflation rate year over year. And this is where most of the discussion is going on in the financial markets, where the Federal Reserve is saying, relax, this is temporary. We don't see this sticking. And the markets are starting to believe the central banks. As you can see, this is the green section's various opening and closing bells. In other words, there was no motivation for new moves in the news. The Treasury did not spike up because the traders are saying, yeah, this looks like it is temporary numbers in the inflation market. Now, when inflation goes up and it sticks, then the central bank is going to have to pull back on its already $40 billion in purchases per month of mortgage-backed securities. When that happens, you will see rates go up. But there are no indications yet that it's happening. And as I've said before, they have come out and said that they're not even talking about pulling back on that program or raising rates. So the inflation numbers, they expect those to kind of calm back down to around 2% once we get through some supply side issues here. And it's just like everything else in the real estate game. It's hard to predict. Everybody's guessing right now. So let's get to a couple questions here. Mr. Jimmy said, what are your thoughts on paying for property right now that will set the high market comps in a community, but it's so unique, there are no other homes like it in the area? If you like it, buy it. You always don't want to have the highest priced home in the neighborhood. That's kind of a general rule. But if your highest priced home is really unique and there's nothing else there like that, then chances are there are people that are also going to be very interested in that home. But if it's way out of line, for example, I had a gentleman that scraped a house in South Scottsdale and put up this white, ultra modern, architecturally didn't look like anything else in the neighborhood. And he was trying to get over almost $800,000 for it. That was a bad move because you had these 1,600, 1,400 small brick homes, and then boom, here's this big white monstrosity, and it didn't fit well. He also made other mistakes where the backyard was a pool and everything was totally cement. So, and if you had a dog, there was, where's the dog going to go? The front was all cement. It may have looked cool for a bachelor on the inside, which he was, but he built it to turn it. It didn't fit the neighborhood. Those things you want to watch out for. But if you're in a neighborhood and there's a really unique house and it just really doesn't look out of place, yeah, don't worry about it. think, it's fine. The thing is, real estate right now, no matter where it is in the short term, it's going to be worth more next year. It's just the way that the math is working. So it's when we get down to normal trajectories in the appreciation of real estate that some of those decisions really matter. But I mean, if you can buy a new home now and in 8 months sell it and make six figures, the market's completely out of whack, completely out of balance. So I think that we are seeing more homes start to show up, but it's ever so slow right now. The neighborhood that I track in Ocotillo has gone from 6 homes to 15, and I'm shocked every time I look at it at the prices that are coming up. You used to be able to see a handful of homes under 375. Now you don't stand a chance. One house that I sold down there for 540, that about 2.5 years ago, that same floor plan right now just sold for 720. Fell out of my chair. So I want everybody to have a fantastic Memorial Day weekend, and thanks for tuning in. And don't forget to come back tomorrow morning at 8:30, and we'll see if anything else has changed. Take on the day.